to whether it's trying to find a deal or an investor, and it's easy to beat yourself up about maybe I should have said something differently, or made a better choice about whether I did or didn't do an investment. And again, look, it's a journey. I think year after year you get smarter, and there's probably some parallel to that on the cross country course of getting sleep the night before, a better diet. But I think opportunity comes when you're working really hard, and you just have a lot of grit and determination, and not too dissimilar to like a pipeline in private equity, in that you talk to a lot of people, you look at a lot of deals, and you're going to have interesting selection as to the best opportunities out there.
Hello, everyone. This is Abhilash Jekmar, co-founder and managing director of Trust Vista. Today on Trust Vista Talk, I have the pleasure of speaking with Adam VeVerka, partner at Newspring Capital. Newspring is one of the leading middle market private equity firms with strategies covering the spectrum from growth equity, controlled buyouts, mezzanine debt, with over $2 billion under management. Adam, thank you for joining us today.
Thanks for having me.
Before we talk about what you're doing with Newspring, it'd be great to maybe go backwards a little bit and talk about your journey. I know you ran cross country for University of Cincinnati. I ran cross country in high school, and when I showed up to university, realized I was nowhere near that level to compete there, so took the easy way out and played rugby. What was it like running distance at a university level?
It was needless to say intense. 2 days. Sometimes totaling up to 13, 15 miles a day. That, in combination with, trying to have a social life and doing well at school, it wasn't easy, but, it was actually probably a measured way to start college with discipline. But interesting thing about cross country, people ask me, what sports did I play? What did I play in college? And some people will knock it as it's not a team sport as soccer, football, basketball is, but it actually is very much a team sport. What I loved about it is every week after your race, you're beating yourself up to, why didn't I do this better, that better? But it comes down to your personal best, and how can you strive to do better every week. But your team relies on you just as much as any other sport, and so it's. For me, it was a mentally stimulating sport that again kept me in shape and kept me focused.
Yeah, well, the idea of personal best, the term PR. If you're a runner, you know what PR means, your personal record. But it's also a concept that if you start thinking about your competition in terms of your personal best, it changes the outlook you have towards any task you might apply yourself to. Can you maybe talk about how that concept of personal best is extended for you throughout your life and career?
Yeah, look, I think that's a terrific question. You could accelerate that topic to whether it's trying to find a deal or an investor, and it's easy to beat yourself up about maybe I should have said something differently, or made a better choice about whether I did or didn't do an investment. And again, look, it's a journey. I think year after year you get smarter, and there's probably some parallel to that on the cross country course of getting sleep the night before, a better diet. But I think opportunity comes when you're working really hard, and you just have a lot of grit and determination, and not too dissimilar to like a pipeline in private equity, in that you talk to a lot of people, you look at a lot of deals, and you're going to have interesting selection as to the best opportunities out there. So hopefully that made some sense, but some parallels there. If there was one takeaway, it would probably be the grit of it all. You just have to keep working hard. Nothing comes without a lot of hard work.
Moving beyond your career as an athlete, you had another interesting experience before you started your professional journey, and I was working with a billionaire, right? Could you maybe share that story with us and what that experience was about for you?
Yeah, absolutely. So it was, the summer of probably, I think, 1997. And I had the opportunity to either go work at the pool shack, flipping grilled cheeses, or learn about taxes. And so I went to go work for an insurance company as an 18-year-old. And this was going into my first year of college. And again, I had reached out to career development just for internships opportunities as, again, an incoming freshman. And I jumped on this. I had no idea probably what it meant, or how an insurance company made money, but I learned a lot that summer. That head of that group, the tax group at this insurance company, had he called me, probably it was 6 months into maybe my freshman year, and said, "Look, there's this opportunity to work for chairman, CEO, founder of our firm." And I thought about it for probably 5 minutes. I knew what it entailed. It would be nights and weekends, and I'd be doing interesting projects, and it would kind of take a few chapters out of my college experience. But I knew it was something I wanted to do and needed to do. Something, experiences of working for a billionaire don't land on your desk every day, clearly. So I jumped on that experience, and it was something that was just a phenomenal experience. Speaking to, again, whether it's a politician or heads of sports teams, you name it. I as a 19-year-old had a lot of experiences others probably would never have, and I'm grateful for that.
You mentioned earlier the idea about having confidence in what you're doing. Some people just have confidence whether it's warranted or not. And for a lot of people, confidence comes from actual exposure and experience and repetition. Getting that type of exposure at 19, what did that do for your confidence?
Yeah, it did something for confidence. It did also something for courage, which I think there's a difference between those two terms. Talking to a billionaire, almost every day for a couple of years during college, on the confidence side, look, I would have hoped it taught me, that, I need to be articulate and be clear with my messaging, whether it's a question he asked me or a question I had for him. That confidence was, felt almost more about, delivery and how I came off with my communication. The confidence, or the courage piece, I think was different, but it's a parallel term that I think can often be interchanged or even confused. I had no choice when he asked to get, again, CEO of a major corporation, many we would know today, or a very senior politician in the U.S. government, to get them on the phone and to sometimes answer questions and interact with them as a 19-year-old. The courage had to be there, or I wouldn't have that job. So the marriage of those two, again, slightly different, slightly interchangeable terms, has taught me a lot in my career. But it taught me that, look, CEOs of multi-billion-dollar corporations are humans, and that you can talk to them, and that they are there to pick up the phone. So that parallel has taught me a lot as we're looking to invest in companies and get a hold of CEOs.
Maybe you can switch gears now, talk a little bit about Newspring. You've been with Newspring for 15 years. It's one of the leading middle market private equity firms with over $2 billion under management. Just being there for 15 years, you don't hear people too often, or as long as you having that type of commitment. So maybe it ties to you having been a cross-country runner and thinking about the long distance. But what was your story of what Newspring was when you joined, how you decided to join it, and how you grew with the organization?
So I joined Newspring in 2006. At the time, our firm was much smaller. We were, about 6-7 years in business, and there were only about 15 people. Me, one other analyst, and several partners, again, leading 3 strategies. I joined Newspring because I was intrigued that this was a multi-strategy firm, and gave me optionality as someone who's just intellectually curious to learn about different investment strategies and different type of businesses that, I could really have the opportunity to learn the entire cap structure and different types of deals that exist in lower middle market private equity. So for us, again, we started with a single focused growth equity firm, but grew into, we have our healthcare strategy or growth equity tech strategy, mezzanine debt fund, a buyout strategy. We just recently launched a franchise strategy, all focused on franchisors. But as I joined, I knew that was something that was unique. And what we've built here, now 21 years in business, is a company. We have around 60 people. And I've seen, again, us grow from what felt like a small, 15-person shop to, again, now we have a head of talent. We have a lot of the verticals you would think that, that do exist within, businesses that we're going to fund. So, I get an inside look of essentially what felt like a kind of a startup at the time. We were a few years into it at that point to, again, now a growing business that, isn't slowing down. Happy to talk about that. Yeah, but last year we had our record year in terms of new deals and capital deployed. But my journey again started 15 years ago with that, and I still feel like I'm in the third inning of it because I as you said, I know it's a long game and there's a lot further we're going to go.
For me, when I ran cross country, where the finish line is, but it makes it much more tangible to see the runner ahead of you, right? And make that the milestone and chase down that person. And then as soon as you chase them down, you set the next milestone. You've seen a lot of milestones with Newspring over the last 15 years. Where do you see the business going from here over the next 10, 15 years? What are the next milestones you hope to chase down?
Sure. We recently launched as I mentioned, our franchise strategy. As of the date of this podcast, we've closed on 2 deals. And again, we think there's tremendous opportunity in that market in particular to help growing brands go from 100 units to 500, whatever that next chapter. That's the latest of the milestones, but I envision us building something pretty large there. In terms of our current funds, where some of them are on their 5th, others are still on their 1st and their 2nd. So we have almost 5 different divisions or companies growing within Newspring. So I think those milestones for us are going to be continued results for our investors, and those will be again hopefully incremental improvements, and we get smarter together as a team, and whether that's finding investments, knowing each other's style, adding value to our portfolio company, finding the best way to monetize them. All of those things come together over time, and we've had this terrific team that's had this history of working together. So we have the benefit of that history. So I would say our milestones are, again, a bit of it is incremental improvement, but then every so often, like our franchise strategy, we'll find a pocket in the market that has what we think underserved opportunity, both for the entrepreneurs and our investors to really get some interesting deals done. So there certainly, I'm guessing, will be a 6th strategy, and on. So we see we're still pretty early, even though it's 21 years. There's a lot more we know we can do.
You said something interesting, that you've built a business here, and I find that interesting because for a lot of folks, when they launch a private equity firm, they never think of it as a business that will ever have any equity value, right? A private equity firm can generate really good income if you're good at what you do, but often when the senior partners decide to retire, the firm kind of unwinds. Maybe junior partners pick up the mantle, or maybe they start a new brand with taking some of the LPs, but most never cross that threshold of that 15, 20 person income generating entity. What had to happen for you guys to make that shift to say, we are going to be a business that has real value and that is scalable? I ask that in the context of, in this last year, I think a lot of folks who, maybe were underwater with carry, whatever, didn't raise funds, but they launched new firms. So I see a lot of new firms coming to market. And I pose this question to people: are you trying to create income, or are you trying to create equity value? For a lot of them, they never thought about that question. You've seen both sides of that equation in private equity, where you were and where you are now. So maybe you can share your thoughts on that evolution and what it means.
Yeah, absolutely. So for Newspring, I would say, one of your specific questions there is what did we have to believe? And this was back to our founder's vision. Again, started in 1999. Was with if we do have today multiple lower middle market strategies that want to provide resources and value add to the CEOs and companies in which we invest. If we want that to work, we're going to need the resources of $5 billion fund. And the best way to do that, staying small and nimble at the lower end of the middle market with, again, pretty targeted funds, 20 companies in a portfolio in many cases. Way we would do that is through a shared resource model. And so that shared resource model, we would have to believe that there's common calling points across investors, across service firms that might be an introduction to the companies we're trying to connect with, such as an accounting firm, a law firm. So there would have to be certain synergies that we could all benefit from, whether that's, again, finding a deal, finding investor, knowing best practices in value add for the companies. We had to believe that, having too many different things or too many different funds at different ends of the market, that wouldn't work. But knowing that there were some commonalities in our approach in that 1 + 1 could equal 3, that's what we had to believe. And that leverage was there when we had 3 funds in 99, and it's definitely there when we have 5 strategies in 2021. So that was a big thing we had to believe. We also had to believe that, again, that there was, this end of the market. Again, most of our companies are somewhere between 10 million and 100 million when we invest. We have to believe that end of the market is fragmented. That end of the market is inefficient. We're not plugging tickers into a trading system on a trading desk. We have to hustle and figure out how to get in front of the CEOs we want. We have to figure out how to use the right data to even determine who to reach out to based on, whether it's signals from, LinkedIn or awards the companies have won. We need to really focus our time and energy. So there's a lot to it, but all those things together, we've believed and we've seen, make us stronger together.
You mentioned you guys have many strategies simultaneously, and like last year was a record year for you guys in terms of deal flow and capital deployed, which is interesting considering what the last year was. How has having those multiple strategies correlated to being able to be successful in this type of environment?
Great question. Starting in March of last year, it was uncertain for a lot of us. I might not have predicted, I wouldn't have predicted it would have been a record year. But as the pandemic proceeded and we were months into the new norm, if we will, I would say we pivoted, we regrouped as a team and determined we needed to play offense in addition to defense. So, look, deal flow for many stopped, came to a pretty grinding halt for a few months there. But again, we knew there were opportunities there. Many firms that don't have a multi-strategy approach or enough resources, and you guys probably know there's a lot out there. There's a lot of firms that might have 5, 10 people. Last year was a time that stressed the resources of all of these organizations, which of course that's where you guys come in and help not only us but smaller firms in a really big way. It comes down to resources, private equity, alternatives. We're still a services firm. We're driven by people with technology, but we at the end of the day all had to figure out how this was going to impact our current portfolio, budgets for the next year. And, once we felt like we had a pretty good understanding of how that, of our game plan and managing and looking at cash flow forecasts, again, we could start to play offense. And why we were able to play that offense is because we have resources across several strategies here who could, again, pitch in with a portfolio company, but again, also on the offense side, look for the interesting companies that jive with our themes. And again, you guys were helpful in that as well, helping us think through some of the some of the research on thesis work or what might whatever that might have been. The resource piece for us really benefited our ability to put all of this capital work in a record year last year. So also, again, shared resources across our strategies. We, deal flow is the lifeblood of our business. So everybody, the day they start here, is trained to be looking for a deal. That's just in our blood. So what will happen when we least expect it is a deal will come in, let's say, to our growth equity strategy that probably should be more of a mezz deal or a healthcare deal. There's a cross-pollination effect of deal flow across the firm. We have the collective networks of 60 people, many people here at Newspring who have been working together for decades. The network effect of deal flow in a large firm like this can help us. Again, whether the deal lands on our desk or if it's a company we were trying to get into, that goes a long way. Lastly, how are we able to successfully put all this capital to work? There's a lot of processes, you probably know, with taking a deal from coming into the door to wire to wiring the deal to so that's everything in between, from the diligence to issuing a term sheet, signing an LOI, legal, you name it. But there's something to be said with the team, about a team working together for so many years. There's actually been studies on this, whether it's a surgeon who's worked with his operating team for years. If you know your team's style, that goes a long way within private equity. Just that throughput of making sure your funnel is wide, moving deals, knowing where to focus on your time. Without a team that knows how to work together well, that can suffer.
Newspring also has a foundation. With the widespread social unrest that's been induced by COVID-19, you guys have taken on a lot of initiatives to support the community. Can you share one of those initiatives?
Absolutely. One organization I'm involved in, it's nationwide, but it's called NFTE, NFTE. And NFTE, I actually sought this organization out because I saw the opportunity for underserved youth in again, sometimes very, very poor communities where there was a need to actually teach entrepreneurship within these communities, within a high school setting. And I sought that out in terms of an organization that, I thought, along with the themes you mentioned, could go a long way. So, for us, finding organizations like NFTE where we really support their cause, and again, we can help drive entrepreneurism across various communities in the U.S. We thought that was pretty relevant for us.
It's a great way to use the skills you have from your for-profit enterprises and translating that into a not-for-profit social cause.
Absolutely.
I guess maybe to close out, it would be great to just get your thoughts on where PE is trending as far as business development and deal origination and what you see for the rest of this year.
Yes, where I see the market's going and the outlook for the next year for us, outlook is still strong. The exit environment is stronger than it's ever been. On the new deal side, we still see plenty of pockets which we think have attractive investment opportunities at this end of the lower end of the middle market. Those pockets exist whether they're in a new industry or a new idea for a buy and build, more in the traditional private equity space. Those pockets exist, and that's why for us it's so important to always be forward thinking in our research, And again, you guys have been terrific from that perspective, Avi. So, looking forward, keeping our networks wide, keeping our funnel wide, and all that has come together for us in an equation that we think works. But again, back to some of the analogies of cross country, we never get comfortable with how we do things here internally or how we're finding a deal, whether that's using data or looking for a new source of data to help find the outliers of companies who can stand above the rest, or expanding our network to actually get into those companies. We're full of grit and determination, and for that reason, together, if we keep doing what we're doing, but we're always forward thinking in terms of thesis areas, research, how we can be better as a firm, all of those factors together, we think will help us continue to succeed and produce great returns for our investors.
Wonderful. Well, Adam, thank you so much for taking the time to speak with me today. Congratulations on the last 15 years of growth and the last year of tremendous success against a challenging backdrop. We're excited to be your partners and be a part of the continued growth story of you and Newspring.
Absolutely. Thanks for your time.